Thanks very much for that. So Japanese auto wangs are doing well. Drew Pettit is Director, U.S. Equity Strategy and ETF Analysis and Strategy Research at Citi. He's with us now on the program. Drew, good morning. Great to have you back on the show. Thank you very much for your time. Deals are coming, not just here with India. And I think we reported yesterday that a deal is unlikely before the 1st of August, and another U.S. team perhaps comes here, post that deadline, and talks will continue. Drew, I mean, what's your sense? I reckon generally overall market assessment of where tariffs will finally settle are rising and have risen quite fast over the last few weeks now. They were consensus was, I think, around between 10 to 15%, closer to 15%. That number is now closer to 20%. Would you agree, Drew?
I would say it's shifting, but we're not all the way back to where the numbers were on Liberation Day. So I think the deal and the news we're seeing right now, Japan on Liberation Day was looking at about 24% tariffs, 15% is a win, in a sense. What has shifted? While we do think tariffs are probably drifting a touch higher versus our expectations, leading into all of this, we actually have some tailwinds now with the Trump administration signing the One Big Beautiful Bill Act law. So there are incentives for businesses that are investing in the United States. It'll show up as tax tailwinds that offset some of the tariff headwinds. Even if they come in worse than people have kind of modeled, if they're better than Liberation Day, you see that counteracting with the tax bill passage. It's mildly more positive than really how a lot of us were thinking, but let's call it 3 months ago.
Hi, Drew. Well, in the midst of all of this, the market's just surging along, right? And you can't blame it because earnings have been good so far. The big banks have been good. We'll see how the tech guys do now. But what's your sense? Further upsides for U.S. equities?
So it's funny, I have to answer this question in two parts, to be honest with you. Tactically, more short term, the market looks pretty fully valued. Sentiment's pretty stretched. Investors are paying a pretty high multiple for those earners, for those good earnings stories. So a little bit of tactical pullback here in the United States should be expected. Return were positive, so we really think you should be buying into that, especially for the growth names in the U.S. To put it really simply, we'd be buyers of U.S. growth on pullbacks throughout this earnings season.
Okay, so you'll be buyers on any pullback. Just on back to Japan, because now this seems to have settled and finally at least there's a rate and it's 15%. And maybe it's not as bad as what the other countries get. Do you expect this to lead to major flows out back into Japan? Remember, it was a couple of quarters ago. I mean, the money moving into Japan was a big, big trade. Do you see that coming back?
You've actually started to see it ahead of this. When I was looking at last month's ETF flows, maybe not Japan-specific ETFs, but you're finally seeing at least American investors buy non-US stocks. Going back a month, the flows into non-US listed ETFs, so thinking international equity from an American investor perspective, were about the fourth highest they've ever been on a monthly basis. We're seeing that at the same time we're finally seeing deceleration in U.S. flows. So the flows were happening ahead of this. Could better than feared news continue that flow pattern? To be seen this month, but the tide was changing heading into this announcement.
Hi, Drew. Good morning. Good to see you, Ben. What about emerging markets? I believe China and Korea, they are your top bets out there. India is not making it. Cut to neutral. Well, Drew, bring us back to reality.
So we'll stick with China and South Korea to kind of kick this off. You're finally seeing good earnings growth revisions here. So that's been a real big driver to the house call around emerging market allocations. So South Korea, China upgraded. Again, both of those really do play to AI and kind of secular tech themes beyond just kind of the country-specific economic drivers. On India, downgraded to neutral. This is a really interesting story because you finally have some settling out of earnings downgrades. You have a good domestic economic story, but you're already paying a lot for that. So again, holding India exposure at neutral, not cutting it to underweight. It's just recognizing that it has been a good story and markets are pricing that in.
Got it. So more, and in terms of downsides at an index level, Drew, here in India, I mean, did you put something out as part of that call?
No, it's honestly maybe take some profits here, keep that allocation closer to more what a benchmark weight might be, and then buying, again, some of the secular growth stories that maybe markets have kind of forgotten about. Honestly, the trade really, if you're going to boil this down, whether it's EM or just international more broadly, is we can go get AI names in some of these regions at valuations that are much cheaper than what you see in the United States. So the AI trade is broadening, and big benefits of that are going to be in China, South Korea, and Taiwan, which Taiwan at its price is actually a neutral in our EM country weights.
By the way, tonight, Drew, is going to be a big day, right, for AI? I mean, isn't that President Trump going to talk about winning the AI race for America? I think the summit is called that, with David Sachs. I think that's happening later today in the US morning. So I don't know what will be announced, etc. But should be interesting to hear from him. Thank you very much for joining us, Drew. Great to speak with you. Thank you for your time as always. We'll take a quick commercial break here. We're going to come back with our top 10 list. But let me just quickly run you through what's coming up.